Welcome back, Temple. So, if you watched the last video, you can go ahead and follow up with this one. And if you'll see, I still left up here the calculation. All those numbers are still there. I didn't change anything. I literally just stopped the video and started over again. So again, we're at your need for life insurance is $709,840.83. This is taking into account that you already have a $100,000 life insurance policy. This is taking into account you have 2 kids, one that's 10, one that's 4, and a plethora of other things. Like I said, if you go to this website, lifehappens.org, you can actually come and do your own life insurance calculator, though this is something that any good agent is going to try and do with you anyway. Generally, what they're going to do initially, they're going to come in, they're going to say, how much do you want? You're going to say 50 or 100,000. They're going to tell you how much that costs, write the policy, and then leave and come back. And then once they've given you what you want, they will turn around on their second visit and try to give you what you need. Just kind of the way it works, because most people are quick to push off. So I'm not going to do an express illustration this time. Last time I did an express illustration, which is a quick, fast illustration. It doesn't get into depth, and it doesn't show all the bells and whistles. This one is going to be a little more in-depth illustration. My session timed out here. Let me relog in. Alright. So, what's this? Oh, this is the runs by my product. Yeah, I don't need to see the stats and all that. That's, anyway, illustration. Well, you can see the stats if you want. It really, there's nothing that can be done of it. At any rate, so again, on the side, you'll see some of my clients. So we're going to look at, here's the companies I represent. Bright House Financial, which is MetLife, Security Mutual, which is MCU Bank in New York, Prudential Mutual of Omaha, which is Companion Life in New York and Nationwide. I'm going to go ahead and start a new case. Any, mini, miny, mo. We've already seen Prudential and Bright House. I don't really like Security Mutual personally, so we're going to go Mutual of Omaha, Companion Life. And you know what? Yeah, let's do a term. Okay. So again, we're gonna put in my info, male, age, last birthday. We're gonna put standard tobacco. We're gonna put the state of New York. We're gonna go ahead and take a look at some of your policy options. So we're gonna solve for premium. Only thing I do generally in these videos until I get deep into the concepts and you guys participate by asking questions like, hey, how can I use this life insurance policy to fund my child's college, going to college, or how can I use this life insurance policy to buy a car, or things like that. I won't go into concepts because, again, I don't want it to fall on deaf ears. It's not falling on deaf ears because there's 3 or 4 people in this group who actually we go back and forth with content, but for all that, we can literally just call each other on each other's cell phones. We all have each other's cell phone number and talk about it like that versus giving it to us. Just like, I don't know if you guys are on Facebook. You saw my homeboy. He's got a gym, a beautiful gym. He said, listen, I'm getting paid by the city to use this gym, and nobody's coming here. So I don't want to hear shit when y'all say nothing about, oh, ain't no resources, because the resources are there and you're not using them. So then we can't say that that's what's wrong with the black community. We're going to go a premium mode of BSP, which is a bank service plan. We're going to do a $1 million policy. Now, this particular, this particular policy maxes out at 300,000, 18 to 50, so we're not going to do Term Life Express. I will do let's change the product because I don't feel like that's going to be another difference. If you look at different companies, different types of policies will have different damn, they don't even have, they have 1 term and the monthly benefit life. I don't like their products. And then let's take a look at a Nationwide guaranteed level term, 30 years. Okay, same standard tobacco, boom, boom, no flat extra, no table rating. Alright, policy info. I'm gonna sell for premium, $1 million. Face amount 2, we're not gonna do. Premium mode, use print next. Policy riders. So, like I said, you always want to have policy riders. You go ahead and put those riders on. Boom. Spouse term rider, I never do. Child term rider, I never do. But I do premium waiver rider. That's a disability waiver of premium. So that means that if you get injured and are unable to work, therefore unable to afford your premium, the insurance company will pay your policy for you. We can do the report options. I don't need the general ledger. I don't need the report options. I will do the product comparison. The product comparison will compare a multitude of policies. Okay, that's my information. We'll go ahead and calculate. Let's see if I can close this. Can I close this? I don't really want to have customers' names up there like that, but it is what it is. So, it's a 62-year guaranteed 30-year term. So, again, one of the brothers asked a couple of things about the red flags and why a policy would be so much less expensive. If you watched the 2 videos before this, I compared 3 policies. I compared a $1 million 30-year term for Prudential, 2 of them, and a $1 million 30-year term for MetLife, Bright House Financial. Bright House Financial's policy was $1,600 a year. Prudential's was about this, $5,400 a year. So now what I'm going to do is I'm actually going to pull up the illustration so you can see a couple of things. Okay, this is a basic illustration by Nationwide. Nationwide is on your side, yes. So one of the main things that's cool about a term policy is it does leverage your dollars, because at the end of the day you're giving up $5,500, and when the event happens you're going to get $1 million. So over the first 5 years you've given up $27,000, and in the event that something happens you're going to get, your family's getting $1 million. 10 years you've given up $54,000, you're going to get $1 million. 20 years, $81,000. Gonna get $1 million. 30 years. Oh, I'm sorry. That's 15 years, 81,000. 20 years, you've given up $109,000. You're gonna get $1 million. And 30 years, you've given up $136,000. You're gonna get $1 million. Well, your family would get $1 million after the qualifying event. If you'll see here, one of the things that I mentioned when he asked the question was about convertibility. So if you'll see, this star says that this is the last year this policy can be converted or exchanged. One of the things about convertibility is, like I said, this is a term policy. So with a term policy, right, you see year 30. Now, once you get into year 31, boom, those premiums jack up. You see how you were paying $5,500? Or I'm sorry, what is that? Year 25, you're paying $136,000. Year 30, you're paying $163,000. You're still going to get $1 million. But anyway, year 31, boom, the prices start jacking up increasingly, which is why around year 20, you want to go, before year 20, you want to go ahead and start converting. So the thing is, initially, you want to go ahead and monthly it would cost you $454.35. You want to go ahead and convert small amounts from a term policy to a permanent policy. What a permanent policy will do is it will avoid this huge jump where you almost in 2 years end up paying what you paid in 30 years. There's no way by the time you're 64 and probably retiring can you afford $76,000 a year on a life insurance policy. It's just not logical. So you don't need to do so. Anyway, I wanted to touch on convertibility really briefly. The next thing I want to touch on is actually that concept, since I brought it up, of I want to send my kids to college, and can I use life insurance to do so? I'm sure a lot of people have heard of or dealt with Gerber. That's actually another one of the companies I write business for. I don't like to write a lot of business for Gerber just because they're not specifically a insurance company. They have great financial strength. I don't ever talk negative about any companies, but it wouldn't be the first company that I as a broker would put you in, but you as a customer dictate where you want to put your money. So if you decide, hey, I absolutely want Gerber, guess what I'm going to do? I'm going to put your stuff in Gerber. But so convertibility would be, let's say you have this $1 million, and finally you're used to paying this $500 a month, but you come into some more money and you want a permanent policy. So you say to me, hey Alonzo, listen, I know I've had this term policy for 10 years. Is there any way I could get a whole life policy? But I'm 10 years older. I don't want to really go through that health exam or none of that, because my health got different. I got sick. I got in a car accident. My legs hurt. I got the gout, whatever it might be. Well, that's the awesome thing about convertibility. You've locked yourself in to a health condition where you're healthy. So now that you go ahead and convert it, you convert it from a term policy to a permanent policy, but you don't have to convert the whole $1 million. Let's say you just convert 100,000 at a time. So that would be what convertibility is, and that may be one of the differences as to why a policy can be much less expensive than the other. With that being said, Black Lives Matter, one love, I'm out.